am Realtor Jenise Taylor, and I am super excited that you decided to take this step towards becoming a homeowner. I created this informational video because there are so many of you out there looking to become homeowners and genuinely just need to know how. It does sound like a simple question, but it definitely isn't. So, what you hear today is truly what I talk about when I'm sitting face to face to my clients, reassuring them and making sure that they understand what they're getting into and what to expect. This video will leave you feeling much more informed about what awaits you on your path to home buying and hopefully makes you feel a lot more confident in the decision. So, without further ado, let's go ahead and get started. So, the first thing I wanted to put out there and just let everyone know is that no journey is the same. I mean, it's in big bold letters, and that's for a reason. And it's because I meet so many people, whether they're my clients or not, but no transaction is the same, no family structure is the same, nothing is the same. So, don't ever feel like you're not doing the right thing or your process is the worst process ever or you know a lot of people just feel like it wasn't meant to be because things happen, and I'm here to tell you that things happen. We figure it out and we keep going and we move forward and we close. So with that being said, to your left you'll see the steps to home ownership. Just as a quick sum up, we will go through each of these individually, but if you're taking notes, then this is just a hit list of what the process looks like. Finding an agent, getting documents together, getting your pre-approval, starting your house hunt, doing your due diligence on the home, and then closing. And so throughout this presentation, you will have those main questions answered like, where do I start? What are the banks looking at? How much will it cost me to get into a home? And how long does it take? None of those answers will ever be the same. Two people, two completely different answers. And what you'll hear me say a lot of times is it just depends. Because I never like to say this is the final answer because it may not be for you. We've seen some crazy things happen in real estate, so I can never say this is the one way that it's going to go. But I do want to note that as you go through this video, you will have more questions pop up. And that's a good thing because you're learning things and then it's provoking more thought. So as you go through, you'll say, oh, I didn't know that, but now what about this? Or I never thought about that, so let me jot this question down. And that's what I want you to do. I want you to jot down questions because whether you're going to talk to me or another agent, you'll at least be a little more informed about what you're trying to say. Sometimes people truly just don't know what they're trying to say. And it sounds simple again, but it's really not because you don't know what you don't know. And this is truly meant to just be a guide that anybody can look at, whether you're in North Carolina, South Carolina, California, wherever you are, you should be able to look at this and feel better about talking to someone about your specifics. So this is truly a step one of your home buying process. So as I mentioned, step one is to get with a realtor. This is all of my contact information. Once again, my name is Jenise Taylor. I service North and South Carolina. I'm based in Charlotte, but I do service a wide variety of counties. So I typically go like an hour out of Charlotte, and that's because you want an agent that's familiar with the area as much as they can be. I don't want to overextend myself because then I'll be doing a disservice to my clients. So I try to be realistic in where I provide services. If you're not located within an hour of Charlotte, South Carolina wise, I go all the way down to Rock Hill, a little bit further. But if you're not in that little catch area, then I would love to help you get with someone, another agent that does service the area you're looking at. Our firm as a whole services North and South Carolina. Most of our agents, we're pretty divided between North and South Carolina. South Carolina agents, North Carolina agents. Some people even have Georgia. So this is my contact info if you need to reach out to me. That's my cell phone, the office phone, my email. To the left, you'll see my social media handles. If you're on LinkedIn, you'll be able to find me by Jenise Taylor, of course. But Facebook, Instagram, you can type in at the Carolina Realtor and it will pop up, even on Facebook. I just learned that. Um, then to the right, you'll see the big free sign. Like, what's free? It's weird to say, but I'm free in a sense. As a buyer's agent, I do work with both buyers and sellers, but for the purpose of this video, we're going to speak on the buyer side. Buyer's agents are typically free to the buyer. When we deal with new home builders and people selling their home, they typically agree to pay us. There are very rare cases when it's maybe a person selling their own home, like a for sale by owner. You may see those signs as you're out driving around. Sometimes they don't want to pay agents, which is why they're going for sale by owner. But usually we can talk to them and have them work it in so that they do pay your agent so that you don't have to, and they get their home sold. I have had many, maybe one, where sellers said, no, I'm not paying. So don't feel like you can't have an agent because you don't have money up front. Even if you're dealing with a new home builder, you want to have your own realtor, because just like car salesmen, they are absolutely adorable. I love my new home reps and I love working with them, but they're employed by the builder, so their representation is for the builder. You want to have your own agent to represent you, and essentially for free, because the builder is going to pay us to help you get to closing. So please know that if you are going out and about and you see a new home and you want to do it, call a realtor and see, if they can help you get into that new home, and they can make sure you're getting a good price for it, make sure there's not other ones out there, make sure nothing's on the backside, because builders work with us. If something's not actively on the market, they may call us or email us and say, hey, I got something coming back on the market. Do you have a client? Just that simple, and no one else knew about it. And then at the bottom, you will see our website, worthyandassociatesre.com. Go check it out. There's a few links on there that you can check out homes that are actively on the market. You can check out some of our agents, who we are. And I am super excited, like I said. So once you get with an agent, what I'm going to do, what we at Worth and Associates take pride in, is being very hands-on and making sure we do a lot of legwork up front so that you're not stressed on the back end. And we'll have you collect these documents that are listed here. I'll go through slowly and leave it up for a little while, so if you're taking notes, you can jot it down. The key things you want to start collecting, some of this is for the lender, some of it is just for our personal one-on-one real life conversation, because lenders, they're very much by the paper, and as an agent, I deal with you beyond paper, so I need to know the full scope of what you have going on. So we want you to start collecting your pay stubs. If you're W-2, collect your pay stubs for the last 30 days. Collect any type of proof of employment. If you're self-employed, what means do you have to show what income you got throughout the year? Collect your employer contact information. I don't know how many times I'll have people come to me that are already pre-approved, because not everyone is looking for a lender. Some people have their lenders, they have their approval, and they're ready to run. And they don't have their HR information. The lender needs to verify that information with your job. They need to make sure what you say you make is what you make. You want to collect your tax documents. That's like your W-2s, 1099s, tax returns. If you owe anything, you want to collect your bank statements, typically 60 days. I say 60 days. Some go back further, like 90 days. But you want to start collecting it for two reasons. On the bank side, they want to make sure you don't have any recent insufficient funds. You're not living beyond your means. And then on the personal side of things, like you and I personal, I'm looking so that you can start budgeting. Because it doesn't seem real until you make it real. And once you print out those bank statements and you see that you have 7 pages worth of food, I know some of you are like shaking your head right now because you know I'm right. 7 pages worth of food, it hits home a little different when it's that, when you print things out. So print the bank statements out, any of your business documents. You want to print your credit report because you and we want to sit down and see what the lender may see, what the lender may say. It may save you a credit pool if we can look at it and tell you that this is something that's going to hurt you. This is something you need to wait another month for to update. So we want you to print those things out so we can kind of go through it beforehand. If you know that you have strong credit and you don't have to worry about those things, then we still want to look at it, but I may not have you print it out to sit down. You want to start collecting any of your mortgage or rental history. Somebody's probably saying, why would I have a mortgage? Not everybody looking to become a homeowner is a first timer. Some people have already purchased homes but still don't know what's going on. It's true. It happens all the time. So start printing your mortgage or your rental history if it's not reporting to your credit, just so that you can show and see written out, whether or not you have consistent on-time payments. Because with a mortgage, they're not as strict as when you go rent an apartment or something, but they do want to know that you're paying your bills on time. I mean, your rent is the closest thing to a mortgage that you have, so the lender wants to make sure you're taking care of that. You want to start printing off your student loan letters. We'll go deeper into that at the end. You want any additional proof of income, Social Security, any type of payments that you get constantly, on a monthly basis, alimony, child support. And then you want to start digging up your assets. If you have assets, any of these stocks, bonds, savings, start digging up those statements because they do count. They do matter. That's what you have them for. You may not use them, but they do count. So once we have all that squared away and we're confident, we're strong, we took care of what we need to take care of, now we're going to say, okay, let's get you to a lender. And what's going to happen at this phase is, this is where we're going to find out what you qualify for, if you qualify, and if you don't, what you need to do going forward. So a lot of people get discouraged at this phase because if they apply and the lender tells them no, it hurts. A lot of people don't like to be denied. But for me, and what I share and push on to my clients is that denial is just denial. All a person can do is tell you no. If they tell you no, they can tell you why they said no and what you can do the next time to get a yes. It's like a denial, but it's also a positive, outlook on it, because everybody's not ready now, and that's okay. But at least you know now, and you're smarter today than you were yesterday, so you have no excuse. So for that reason, you don't want to wait. Don't wait till you have to move, in 2 weeks, because it's not a rental. You can't just apply online and move in tomorrow unless your financial situation is set up that way. Not saying it's impossible, but it's very, very rare if you're dealing with financing. Cash is a completely different story. But if you're dealing with finances, the lender has to be a very, very, very awesome lender and proactive to get you closed in 2 weeks. But outside of that, it could easily take 30 days or more to move into your home. As far as getting approved, I say don't wait, because it may take a few days for them to even give you an approval. There's two things, there's pre-qualifications and pre-approval. If you're going to get your pre-qualification, then that's you going online and, they give you give your information online. They say, okay, great, you're approved for this. But then the second stage to that is the lender's going to follow up on that and start telling you to send in documents. Almost like as soon as you get your approval online, they'll send you another email and say, hey, send in these documents. So yeah, you have a piece of paper that says you're qualified for $300,000, but they're also asking you to send in your information so that they can confirm that. And once they confirm that, you'll have an official, okay, this is what you're qualified for. So you don't want to wait, because once again, if you don't have HR's number, you can't find you're locked out of your bank account. Just things like that may delay the process. And you always want to get a second opinion. I like to do three lenders, but you don't necessarily have to. If you have a super awesome offer on the table from a lender, you can roll with that. I'm not gonna say, oh, that's a great offer, just go check somewhere else. If it's one of those offers where you're like, it's okay, not what I was looking for, then I will say, okay, let's look somewhere else. And what I say is, get the feedback from one lender to see what they say. And that may help you go in the right direction for lender number two, because you don't want to just keep having your credit ran over and over again, getting the same answers. Know your numbers. This is huge. You get your pre-approval. It says you're approved for $300,000. You take it and you run with it. A good agent, like myself, is going to slow you down and talk to your lender, because we want to know, all right, he or she is approved for $300,000, but what does that really mean? What payment are they qualified for? What closing costs are you calculating? What down payment? What interest rate? What loan terms? All these things are important, because no two homes will have the same payment. Even if they're both $300,000, they're going to have different payments, because one may have an HOA, or one may have really, really high taxes, whereas the other one doesn't. So you want to know your numbers on the front end, because you don't want to find your dream home and it says $300,000. You put your offer in, you get it accepted, and then you send it over to the lender and they're like, you don't qualify for that because the payment's too high. I've never had that happen, and this is why. I know the numbers up front. So now that you know, you'll know. And lastly, stay in contact with your lender. Don't get approved and then just get missing. Your pre-approval will have a time on it. 60 days, 30 days, 90 days. There's a date on it. And if you don't find a home within that time frame, they're going to have to rerun your credit when you're ready to actually get started. So if you are a person that doesn't really need to move like right now, in the next 90 days, you may go ahead and get and apply just to see what options you have, so that you can better prepare towards the end of the year when you're ready to. So it's not necessarily like you're applying so that you can move. You're applying to see if what you're qualified for is realistic. And if not, then what do you need to do so that when it's closer to when you are ready to move, you're ready. So once we gone through all the numbers, I bothered your lender a few times. They're like, who is this woman asking me all these questions? I like her, but I don't like her. It's time to house hunt. This is like the fun part, not so fun part. Because it's competitive. And I'm going to start with that because I know you're all thinking it like it's vicious out there. I'm not going to lie to you, depending on the home, the area, and what, the times, it can be very competitive, as well as price. But there's a purpose behind it. And I always tell people that for this one house, there's thousands of people who just saw it online, but only one person can live in there. So you should never feel like you're a failure or what you have to offer is not good enough. Sometimes it just boils down to another offer was 10 minutes earlier, or another offer was $1,000 more, or another offer wanted to go longer and you wanted to go shorter, but the seller wanted a longer closing date. Like things you just don't know. The seller liked that person's, their energy or their name look like you just never know why your offer isn't accepted. And I make sure my clients know that they can't take it personal, because you may never know. So always be competitive. You want to make sure that when you're putting in an offer, you're putting in your best offer. And that's where that be realistic comes into play. You want to be realistic, because what happens is people watch TV, they watch the bidding wars, and sometimes you don't have a second chance. It could be a house that was on the market for 60 days and you think that, oh, they want my money. I'm telling you now, I've had sellers who were willing to wait a whole year to get the offer they wanted because they didn't have to move. So it's not that every seller is just itching for an offer. Sometimes you just have to do your best offer. And that's always what I tell my clients. When we submit this offer, are you okay if they accept another offer and never say another word to you? Like they don't come back and say, oh, well, can you come up a little bit? Can you ask for less than closing costs? Are you okay with this offer? If it's a house that you don't really care for, you like, I like it, but not really, but enough, I can understand playing around with it. But in this time, you want to be competitive, realistic, and prepared. You want to be prepared mentally because, like I said, you will feel defeated. Nobody likes hearing no unless you're me and you're crazy and you're just like, okay, next. But for the average person, you don't like being told no, especially when you're in love with something. So picking an agent that is very positive, and reinforces what's going on is very important. Once again, it does take time. It's a fight. It's a fight for your house. You may not find one that you like in the first week. I've had people find houses on the very first day out. Some people, they're months into it right now. And it just depends on what you want and what's out there. So here we are. We found our house. We fought. We beat some people up. We knocked them over the head. We won the offer, right? Now what? Like, what goes into an offer? This is very, very important because these forms will set the tone for your house. This is law. Like, this is the law. This is the guideline to what you're signing up for. So you want to pay attention. You want to make sure you read the offer. If anybody sends you anything that is like through DocuSign is what we typically use. Send you through DocuSign and they just want you to sign it. They haven't gone over it with you. That's a red flag. And I'm telling you now. So if you're working with somebody and that's what they do, then you need to have a conversation with them and tell them either they can sit and talk to you over the phone. I mean, hello, it's 2020. You can talk over the phone while you're looking at the screen on each other's end. Go through and let me know what I'm signing because you don't know. And it's a bunch of attorney terms and it's a lot. It's for North Carolina, it's about 13 pages of words and it won't make sense to you. So your agent is supposed to be there to break it down for you. So these items are the key components to an offer. Of course, there's more to it, but I won't take up your day going through a whole offer. That's something for you to sit with your agent to do. So the biggest thing you want to include is your pre-qualification. And I have that first because when you put in an offer for a home, the seller wants to know that you've already talked to a lender. They don't want to know that you're just house hunting, window shopping, and they're going to take the house off the market for somebody who they don't even know is qualified to buy the home. It just doesn't make sense. So that's why if you've ever spoken to an agent, we always ask, have you talked to a lender? Have you gotten approved? When you say, oh, I love this house, I want to go see it. And that's why we don't want to waste your time. Our time is precious. I have a family. Most people do. So time is of the essence. And we don't want you out here window shopping for the wrong thing. Because that will aid in you feeling defeated. So once we have our pre-qualification together, the first thing you'll see on there is what are you offering? What's your offer price? I know what I'm asking as a seller, but what are you offering me? So you want to have a competitive offer price. You'll see in there, it will ask you about earnest money. And I want to note here that anything that you see with a green money sign in parentheses, if you look on the bottom left, it shows money may be needed up front. So these are things that you typically will get credited back for, but you have to put the money on the table first to even get credit for it. So no matter how much, down payment assistance you have, what kind of financing you have, these are things that are going to come out of your pocket before you get to closing. So your earnest money, they want to know if you're serious, what type of money are you willing to put on the table? So the earnest money and the due diligence really go together. So I'll start with the due diligence fee, and that is your money that's going straight to the seller. Like, if you accept my offer, here's my due diligence fee for you to give me X amount of time to make sure that this is the house I want. It doesn't matter how long it is. If you have a 30-day close, I typically make it a 2.5 week due diligence period. And you want to make it a reasonable fee because this money is going straight to the sellers to take their house off the market. What compensation are you giving them? Incentive are you giving them for taking their house off the market for a month, 2 months, 3 months, however long it is that you have to close? What incentive are you giving them? It goes straight to them. It's mailed to their house. They cash it and it's gone. It's done. Wipe your hands clean of that. So then, say your due diligence period is 2 weeks. The due diligence fee covers that. After that 2 weeks, you roll into earnest money territory. Now, both of these, earnest money and due diligence, they both come out when your offer is accepted. However, they play a part at 2 different times. So, offer is accepted. We send out the earnest and the due diligence money. The due diligence money is going to the seller. It's theirs, they cash it. Your earnest money is going to an attorney's office, and it's going to stay there until you close. That money is almost like a backup deposit for the seller. If you walk away before your due diligence period is up, you are slated to get the earnest money back. And I say slated because I can't assure you this is what it should be, but I can't assure you, and I don't want you to come looking for me. So you're slated to get your earnest money back if you cancel your contract within this due diligence period. Once it crosses over outside of the due diligence period, your earnest money is now in jeopardy. That means if you walk away at any point after your due diligence, you need to ask for your earnest money back. You may not get it. It's your seller's, it should make them feel whole again because now I have your earnest and your due diligence and I just took my house off the market. This is supposed to make your seller feel whole. So all in all, you want to look at what earnest and what due diligence am I comfortable putting on the table? How serious am I? It's 2 sides to it because I've had clients, veterans specifically, that didn't have to put any of these down. No earnest, no due diligence. However, when things went wrong, the seller walked away because they didn't have any, they didn't have anything to hold them there. Typically, people don't want to walk away because they don't want to lose money. But if there's no money on the table, I'm just going to wipe my hands clean and go away. So it's 2 sides to it. You want to be competitive. If it's a home that's super desired, it's fresh, it's brand new, or remodeled, should I say, and a lot of people want it, and you come to the table and say, hey, I want you to take your house off the market for me for $200, they're going to laugh at you. That's not even going to cover the mortgage that I'm going to have to pay for this month. That's not going to cover the truck that I'm going to pick just in case you back out and then I still have to pay for. You want to think about things like that. So once you got your due diligence money together, your earnest money together, you start your due diligence. And we'll talk about that on the next slide. So you're putting that in the contract. You're putting your closing date. When do you want to close? Everybody doesn't want to close in 30 days. Some people want to wait till what would have been school getting out, but now everybody's out. But some people want to wait 3 months. Maybe the seller is getting their house built and they need 6 months, but they like to get on a contract now so that they don't have to stress about when they're going to find someone to purchase their home. So you want to put in your offer when you want your closing to be. If you're lucky, you meet the seller and y'all have a nice sweet conversation. It's rare, but I have had that happen before and it worked in our favor. They're going to ask you what type of financing are you using. Are you using VA, FHA, USDA, conventional? They want to know those things. Do you get down payment assistance? Because it's all a negotiation factor. It's all important. Maybe they don't want to have to deal with a certain type of loan. So they want to know if that's what you have. And you want to be honest. You're allowed to change lenders and things happen while you're in the course of buying your home. So it's understandable, but you don't want to go into it being deceptive. I can tell you that typically does not work out well for either side. Are you looking for any closing costs? So the biggest thing to that is closing costs and down payment assistance. Sorry, closing costs and down payments are not the same thing. So when you get your approval, it'll show you your down payment required, whether it be 3%, 10%, whatever it is, and then their closing costs, which are lender fees, escrow fees, which are things like your taxes, interest, homeowners insurance, HOAs. All these little fees consist of closing costs. So they're two separate things, and closing costs can easily be 3%, 4% of your loan amount. It depends. There's my favorite saying. It depends. So this is why you want to know up front, why you want to know the numbers up front. So you can go into your offer saying, hey, I like your home. I'm willing to offer what you're asking. I may be even offering more, but I need you to pay X amount of money for my closing costs. There's no specific number on what you can ask for. Yes, there's what's realistic and what may not be so realistic. If you're going to cut the seller's profit down by, you're asking $10,000, $20,000 on the asking, yeah, they're probably not going to pay your closing costs. But if you're realistic in what you're asking for, they typically are willing to work with you to get the home sold. There are some other things that go into an offer, but like I said, that's something that we can talk about offline, or you can speak with your agent about. The goal for submitting your offer is getting it accepted. What I do want to note is that depending on your state, they typically have like room for a delay. And even if your state does not have room for delay, you always want to expect room for delay. You never want to put your notice in and give it exactly to the date of your contract, because your lender may say, we don't like that closing date. We need to push it back a little bit. Something may happen that's out of either side's control and the closing date needs to be pushed back. You always want to give yourself a cushion so you're not stressed. So please remember that. So here's the due diligence period. We already put the fee on the table. We paid $500 for 3 weeks worth of due diligence. These are the things that are going to take place during the due diligence. And you'll see those green money signs again. So during our due diligence, the biggest thing to know is this is your time to make sure this is the home for you. For any reason or no reason at all, you can walk away. And I do want to note that when I'm speaking in relations to North Carolina. I'll try and put that in the notes when I post this. But I am speaking in relation to North Carolina. South Carolina is a little bit different, and we can talk about that offline. If you're in a different state, you can talk about that with your agent in your local area. So back to North Carolina, your due diligence, this is where you got your offer accepted, and now we're sending your documents to the lender. We're sending your contract to the lender, any addendums to the lenders to say, hey, they're on the contract. This is what we offered. Can you start processing it and making sure that everything looks good to go? So while the lender's wheels are turning, our wheels are turning. Now we want to start getting our inspection done. And we want to do that very soon because we want to know what's wrong with the house. You're going to have a home inspection, a pest inspection to make sure there's no insects eating your home, destroying your home. If you have a pool, you get a pool inspection. If you're out where you have septics, you want to get septic inspections. Any inspection you can think of that will make you feel better about buying this home, this is the time to do it. Because throughout this whole due diligence period, everything's up for negotiations. Everything. This is your time to say, hey, I didn't like this. Can we change this? You know, what will make me feel comfortable going past due diligence with this home? So once we have our inspection done, we'll review it, write up what we like the sellers to fix. If it's realistic, typically they'll go for it. I know. Some people just have personalities to where they want everything to be perfect, and I'm telling you, get you a strong realtor. Yes, I'm a strong realtor. And I say that because we will help you understand why it can't be perfect. Because there's a human being on the other side of this transaction, and they may not have the funds to do everything that you want them to do. So they may not have the funds to, fix the plumbing, fix the electrical, fix all the scrapes. Just, there are a lot of things you'll see on your report that are cosmetic. They may not have the money to just do those things or the time. And you don't want to lose a house because you want everything perfect. If it's something you can fix later that's not, major, take that into consideration. But this is the time that you want to do these things, because if the inspector comes back and says, hey, the structure is bad, you need to get a structural engineer. That's a negotiation. Hey, seller, can you pay for an engineer? Have you already had one? It's a negotiation at that point. The lender is going to order your appraisal. You will pay for this as well. Some lenders let it roll over to a closing cost, but typically you pay for that up front. And you're paying for that up front usually because if for some reason you don't close, the appraiser still has to be paid. So they like to get it paid for. That way they don't have to deal with paying for something that didn't even go through. So you pay for that up front. And this appraisal is going to tell the lender what the house is worth. So the seller asked you for $300. You offered $300. The appraiser is going to come in and tell you if it's worth that. May be worth more, which is great. You have instant equity. May be worth less, which means the lender won't allow you to purchase the home because it's less than what it's valued at. So then we go back into negotiation phase, because now we have to talk to the seller and say, hey, seller, the home wasn't worth what we offered. Are you willing to bring the price down? If it's reasonable is conditional, because I've seen sellers fuss about $2,000 and I've seen sellers be okay with losing 10. So it's truly case by case, but it's a negotiation. You're going to start looking for home insurance. It's required with your loan typically. So you want to make sure that you can afford the home insurance. Home insurance typically does not cost a lot. Of course, it's based on the value of the home. So if you're in a home that's upward of $600,000, then your home insurance will likely be higher than one that's for $300,000, $200,000, $150,000 type home. So that's why it's important for you to get quotes just like you do with your car insurance. So after that, you want to just do general home research. Anything that's important to you, this is the moment where you start looking up stuff. Criminals, offenders, schools, shopping, whatever is important to you, this is your time to look it up. Surveys, this is going to, lay out your land. Where does yours start? Where does your neighbors start? They are very important. If you have the means to get one, I suggest you do. They're typically about $400. But if you plan on building a fence, then you definitely want to do that. If you plan on doing anything really on your land, then you want to get a survey done. Title work will be handled by the attorney. So like I said, with the earnest money, once we send that earnest money, we send them the contract as well. They'll start doing title work, making sure that the home is even able to be sold to you. If you have spouses, or the seller has an estranged spouse they need to track down, the seller owes somebody that they didn't know they owe the federal government some taxes. This is what the attorney's doing. He's working on the back end to make sure that when you get to closing, you're good to go. And if anything pops up in between then, we're back into negotiations. 8 is all at the bottom for a reason because it may or may not be relevant to your situation. Not all homes need repairs. But I put the green money sign beside it because your seller may not want to pay for anything, any repairs, but you may love the house. And so if it comes down to, okay, my seller won't pay, to unclog the bathroom drain, you may just say, I'll pay someone I know to fix it. And then you're done. Depending on what the repairs are, you may just be willing to fix them yourself and move on because you love the house. So you always want to save, and save again. So after we've all done all that fighting with the other home buyers to win this house, we fought with the lender because they're going to ask you 500 questions. They're going to ask you for documents on top of documents. They're going to comb through everything again one last time to make sure all is well. They're going to send out a clear to close, which means they've done everything they can do and this person is clean. They're clear, they can close. Now we made it to closing day. And what's going to happen here is you're going to be signing a ton of documents. I mean, a ton of them. A lot of the stuff is what you've already seen online. Closing disclosures, which will lay out the money. What did you spend? What are you expected to spend? What your payment looks like. You'll see that a few times throughout the process, but closer to the very end, you'll get one last closing disclosure to show you this is the official number, what you need to bring to closing, what your payment is. Any type of discrepancies, you want to address them ASAP. You never want to sign off on something that's wrong because, hello, you just signed off on it. You know what I mean? So make sure it's all good to go. So you'll be signing documents. Once you sign those documents, you'll take a break, stretch your fingers out, do a push-up or two, and then the attorney is going to send those documents into your county register of deeds. And this is what they call recordation. It's not yours until it's recorded. So you never want to move into a home, start doing anything until it's recorded because it's not yours. And I know we see TV and we hear things, like, oh, I signed on my home, it's mine now. Not to rain on your parade, but it's technically not until the county says it is. And because of that, you may not be able to get your keys at closing. It's up to the seller, honestly. Some sellers don't care. They're like, okay, we signed, whatever happens, happens. We assume it's going to get recorded the same day. Give the buyer the keys. There are other sellers who feel like, no, we're going to wait till it's official and then they can have the keys. We find these things out as far in advance as we can. Sometimes we just won't know until the day of. If it's a new build, you don't really have to worry about that because there's no other seller other than the builder, and they're there to say, hey, pick your keys up. So closing can be really quick. Like right now, today, as I'm recording this, today I had a closing. It was a car closing due to COVID. So you never know what your closing is going to look like. Some of them are quick, some are long. I always say prepare to take the day off. If it's a smooth closing, then it may only take 30 minutes. If something's going on, it may take longer. Just be prepared, bring a snack, and we'll get it done. So all in all, that's the quick sum up of what's the process to start buying. Now, here are a few things to note, like those one-off questions that you may have, not necessarily about the steps, but all the ingredients in the inside. The biggest thing people ask me is, how much do I need to put down? And there's no 100% sure answer for that, because it depends, right? So it does depend. And I found this cute, informative flyer, and I loved it. So what you'll see, I'll start from the top, is that you don't need 20% to buy a home. Not typically. Like I said, it depends, but this is just general information. There are conventional loans out there that require no down payment. And I know some people are going to say that's not true, but let me tell you, as an agent, I close these homes, okay? Let me go back. If you look at both homes on your left and your right, both of those close with 100% financing conventional loans. It happens. The home in the middle was a USDA home. New build with over 3 acres, ATV trails. So there's homes out there and there are loans out there. I just wanted to note that. So there are conventionals, no down payment, low minimum score requirements. If you see to the right, I put that NACA is a conventional loan with no credit score consideration and no down payment required. And I put that to the side because a lot of people know me from working with NACA, so I didn't want to completely leave that out. And I felt like this was a perfect time to speak on it. If you've heard of NACA, yes, I do work with them, and yes, I am a NACA home owner. It is a beautiful product, lowest interest rates out there. Not for everybody, but it's an awesome program, and we can talk more about that offline. FHA is typically the same, always 3.5% down, 580 minimum credit score. During this whole COVID crisis, things have changed a little bit. They've increased their minimum required credit, for a lot of banks to about 660. So you always want to check with your lender before you just jump off and apply. Find out what their scores are. And you'll see FHA a lot of times when you see down payment assistance programs, because 3.5% can be a very, very hefty penny if you haven't saved and prepared for it. VA, always 100% down, 100% financing, no money down. 600 minimum credit score is what I've seen. Some lenders may choose higher. USDA, same as the VA, no down payment. Credit score is really about the same. And that's more for your rural areas. And so this was created because at one point, conventionals were 20%. There weren't a lot of options for 100% financing outside of USDA and VA. So a lot of people feel like, oh, I want a USDA loan so I can get 100% financing, but they don't realize that a lot of places aren't considered USDA. And so it drastically limits the home you can buy. So this is just here as a to jog your thoughts and make you say, maybe there are some other options out there for me. Let me talk to somebody and figure it out. The do's and don'ts of buying, while buying a home. Personally, I make you sign off on this. When I do my agency documents, I make you read it, sign off on it. It doesn't look like this, of course, it's an actual form, but I make you sign off on these things because they have absolutely stopped the closing right before closing because of these things. So what we obviously want you to do is to keep paying your bills on time. Do your best to keep the same job. Things happen, but of course don't just jump off and quit. Keep your balances low. Don't max out your cards. I know birthdays are a hard one for parents, but as a parent, you have to show your children that when they need to do something, they need to do it. And if you need to sit down this year for your birthday, then that's what we need to do until we get into our home, and then we can figure out what we want, how we want to celebrate. Trust me, they'll respect you for that, and if they don't, that's another conversation. So you always want to update everybody on any changes. If something happens in your life, you need to be telling somebody, something drastic. If you're going to have to sit out the process for a while, tell somebody. Likely you'll tell your agent, and your agent will relay the message to lenders and stuff like that, because you have more of a personal relationship with your agent just because we're there from start to finish. We're there in the middle of the night when you have like burning questions in your head. Let somebody know. What we don't want you to do is start making large purchases. No large purchase. Make sure you keep everything the same. Don't go buy no furniture for a house that you don't have yet. It's not yours until when it's recorded. After it's recorded, I don't care if you run to Ashley's Furniture, Pier 21. I don't care where you go. But wait till the ink is dry. Don't consolidate. And I put, if you notice under the X mark, I put unless instructed by the lender. Sometimes they do want you to consolidate, but don't make that decision without speaking to the person who's going to give you the money. Don't open any new accounts, because we know that when you open a new account, it will affect your credit. Because they're going to do an inquiry, and it's now a fresh account, and because credit is so awesome, they penalize you for having new accounts and those accounts not being old enough. I know, how's a new account supposed to be old enough? We're penalized for it until they deem it old enough. So don't open new accounts unless the lender tells you need it to get where you need to be credit-wise. Do not spend your savings. Save. Sit down. And I hate to sound like that, but sit down. Don't go on no unexpected trips. Don't just be out here buying things. Focus on buying your house. That's all you need to be focused on. After that, live free. But you don't want to be the person that was supposed to be saving. You get to closing. The lender says, let me see your bank statement, your updated bank statement. And it's nothing in there. Or it's not enough for what you're supposed to have. They will not let you close on your home. If they tell you need $10,000 in your account for a down payment, closing costs, whatever it is, and they pull that statement and it shows 5, you're not closing until they can source some money. You got to call your mom, cousin, best friend, Jerome, I don't know, but you're going to have to get a loan from somebody. Not a loan, a gift. Because you can't get a loan, because then that means you have new debt. So it has to be a gift, and they have to sign off for it, and it has to be sourced. So just keep your savings so you don't have to deal with all of that stuff. And one thing I want you to remember is that the more money used on debt just means the less money the bank is going to let you use on a house. So when you hear people talk about debt to income ratio, that's what we're talking about. The bank says, all right, you make X amount of money. Now we're going to let you use a percentage of that for your debts and your home. It's just like a scale. If you have heavy debt, then that's less of a home that you're going to be able to afford. So you want to start clearing up some of that debt. Don't close your accounts, but start bringing them numbers down. If you have like loans that somebody has you on, you may want to talk to them about bringing that balance down, because in a general sense, $50 can easily translate to $10,000 worth of home. And I say that all the time because you have to think about it. It's 10,000 or whatever that number is divided by 360 payments, 30 years if you're doing a 30-year loan. So it doesn't sound like a lot in a monthly sense, but in the grand scheme of things, that's the difference between you being qualified for $250 and it could be a difference between you being qualified for $300. So always bring your numbers down as much as you can and keep them that way throughout your, processing time. Just some quick credit facts. I'll leave this up for a quick second. These are things that will affect your credit score. Of course, your payment history, credit utilization, length of the accounts, how many people are pulling your credit, opening new accounts, new collections, what type of credit. So people ask me all the time, like, what does that mean? What do you mean the type of credit? Revolving credit has a greater effect than an installment. And here's why. Your installment is slated to be gone eventually. You're paying a car. You're paying it off. You're paying furniture, you're paying it off. Now, if you have a revolving account line of credit, it's going to stay open. You can use it, pay it back. Use it, pay it back. So those are always awesome. Not all credit bureaus receive the same information. We know this. This is why none of your scores look the same. It depends on who that creditor reported to, and it depends on how that credit bureau reports. Monitoring your credit will not hurt you. So if you use Credit Karma, I know, Credit Karma for the sake of monitoring what's on your credit report, not necessarily your credit score. CreditWise, MyFICO, all these places, they won't hurt you. It's truly a monitoring service. Bankruptcies last about 10 years. That doesn't mean you can't buy a home until 10 years. It's just going to be on your record for 10 years. Closed accounts will come off after 7 years. If something's still lingering on there after that, you have a right to request a change. I'll leave that up for a quick second while you jot your notes down. Dun, dun, dun. So, the assistance programs and student loans. So, assistance programs, most of these are used, of course, towards your down payment and any type of closing costs. Some of them let you use it for credit repair, medical bills. It just depends on what the program specifies. But it's very important to note that not all lenders use down payment assistance programs, and not every person qualifies for them. And that's huge because nobody really talks about that. And every time I say it, people are like, what? So because they're usually considered second liens, you have to get approved for it. So what happens is you go to the lender A, they approve you $200,000. You say, I want down payment assistance. What do I qualify for? They may come back and say nothing. And you're like, what? I just got approved for a house and you tell me I don't qualify for down payment assistance. It happens a lot. And here's why. Because down payment assistance have their own layers of requirements and restrictions, whether it be income, household size, location, occupation. It can be anything that a lender has. Credit score. So a lender may qualify you and say you needed a 600, but the down payment assistance program may say you need a 660. These are important, and this is why you want to communicate with your lender before and let them know your expectation of where you plan on getting the down payment from if you have to pay one. They need to know that because they may have been able to tell you that you don't qualify for those type of programs, and if that's what you need to do before you apply, you need to take X, Y, and Z steps. So please share that information. Share it, share it, share it. It's two separate liens potentially on your home. As far as student loans go, 0 is not a number in the student loan world. I know some of my math people are like, yes, it is. Not in student loans. So no matter where your loans are right now, and what I always hear when I ask about student loans is, yeah, I have them, but it's at 0. I'm not paying anything on it. Well, to your lender, you need to be paying something on it. And I'm not saying go out and set up a payment. What I'm saying is their expectation is that you'll eventually have to pay it back. And so because of that, is one or two things are going to happen. They're either going to take a percentage of your total balance, or you're going to provide them a projected payment. And most of the time, the projected payment is significantly less than what 1% would be. I mean, I've had clients with student loans into the 500s. So 1% definitely affected their affordability. The payment letter made a big difference. Not all lenders accept them. Not all loan types accept them. So this is why it's important, again, to communicate with your lender. Let them know you have student loans and what your balance is, what your thoughts are. But I don't want anyone to feel like they're just out of luck because they have student loans. Talk to somebody and let them see if that's realistic for you or not. Yay! We made it to the end. It has been a wonderful journey. I just want to say I'm excited that you made it this far if you're still here. If you have more questions, which you likely do, I would love for you to reach out to me, somebody, and get more information. I know that it was a lot of information, but it's not all. I hate to say that, but there's more to this, and I did not want to talk your head off. But please, please, please reach out to somebody, some agent, somewhere, and get a more detailed account of what to expect. This is all general. Now's the point where you set an appointment and you start talking about specifics. Well, this is what I have. This is what my husband has. This is what we have going on. So once again, my contact information is here at the bottom. Call me, email me. If you're on social media and you're seeing this, shoot me a message. I absolutely appreciate all of you guys trusting me. I appreciate you taking time out of your evening to hear my voice, to hear what I have to say. And just remember that there's light at the end of that path. Don't be defeated. Don't let anyone else's experience deter you. Try and see what happens. If you try and you fall, you get back up again. You have time. I always tell people home ownership can easily be 1 year away. If you have to sign your lease again, that's fine. But do what you need to do in that year so that when it's time, it's time. All right, you guys. Thank you so much again. Peace and blessings.